This is our Forex blog for March 9th, 2011. And like most days, we want to start by looking at which currencies are strong, which ones are weak. If you have a currency like the dollar that was extremely weak, the weekly monthly trend was down and it had a day or 2 or 3 day counter trend up move, the monthly trend's still down. Today, when you see the weakness there in the dollar come back at extreme levels, plus our new FX Momentum Pro is showing, pretty much on these bars, all the dollar pairs are going down, and it's a little faster than our IntelliTrend. I plan on having the option of including it in there because it's easier to just watch one reading that takes in all of our statistical tools. But the Swiss, which was extremely strong, and it had a big counter trend day yesterday, started getting extremely strong today around 3. So it's very safe to assume the previous strength of the Swiss will continue and the weakness of the dollar will continue, and it did. The dollar Swiss was a great trade to look at, selling up near, yesterday it went up to the upper containment bands and had 2 false breakouts last night and today above the previous day's high. It doesn't get any better than that. It went up last night with almost no momentum, a double bottom there again with no momentum, and when it finally broke down, you have kind of a little mini head and shoulders pattern right here. You want to go short, and once it breaks underneath the hourly, you pretty much know the trend's down. If you weren't in that trade here, when it found support at the weekly high right here, which is a very key support level, once the price breaks above it like it did yesterday, comes down, if it was going to go up, it would have. And the fact that there is no real buying here at a major support level tells you that the previous downtrend's likely to continue. You go short right here and it fell off a cliff. Excuse me, you made about 60 pips. Now it's always risky to short underneath the lower containment band, but one thing that you can do on the way up right here is draw your fibs on this level and look to get short on this Elliott 2-wave pullback. It almost tagged that level here. It went up with almost no momentum. You'd still be short right now. You're only up maybe 8 or 9 pips on there. That's another great trade there as well. Another one that was quite strong today, and the pound dollar had been down 4 days in a row. The longer term trend was up. Using our FX total view and seeing that a currency is down 4 days in a row, when again the monthly trend is pretty decently strong, it's very likely to reverse. 4 days down in a row. Today, it had incredible strength come in, and the previous trend was up, and once it goes and is above the hourly moving average, it's a pretty high probability trade. The first trade I would have taken is right here, kind of went sideways right here. I'd get out, made a higher high and pull back. I'd look for this as an area to buy, but then it broke down underneath the hourly, so I'd be a little bit more cautious in seeing what happens here. There's not a whole lot of real-time momentum, but when it goes up and comes back down, isn't able to go back underneath the hourly, this is a pretty decent place to buy. And again, you want to draw your fibs off this last wave, and the fib targets are great profit targets. So you're in this trade somewhere around 70, out at around 99, 30 pips. And the market went sideways here for an hour and a half. You have kind of a double bottom there on a tick chart or 2-minute chart. You would have saw that, and it broke out through this trend line. You don't know it's going to continue up because there's not a whole lot of real-time momentum. But the dollar was weak today, and this was down 4 days in a row, and it's likely to make one more wave up. So you buy that next one, draw your fibs again, and notice, anytime a fib target is outside of the upper white band, there's another major resistance area, the weekly pivot. That's the average price of the previous week. Major resistance. There's not a whole lot of statistical strength. You want to get out of your trade, and I would even go so far to say is, you would want to kind of scale into a trade up here and look for a counter trend reversal, because it's been down 4 days in a row. Short-term weakness, longer-term trend still up, but it's likely to pull back here to the previous day's high, and you can make a quick little 20 pips there. And when you didn't get a bounce off the previous day's high, that tells you there's usually buying there, and there's not. When it breaks down underneath there, you go short, and usually the market will pull back to the hourly moving average. Notice on the way down, the market found support at this 20-day moving average, weekly pivot level. This is a monthly pivot level right here, the average price of the previous month, and the hourly moving average. Anytime you get a big move, the first time it comes down and hits the hourly and there's not a whole lot of weakness, it's a great place to buy. And if you're a little bit afraid to buy, wait and see what happens. This one kind of went up, pulled back a little bit, and when it took out these bars high, you go long. This is your profit target. It went through there, so your next profit target's right here. And again, there's not a whole lot of momentum, so you probably wanted to get out of your trade here. I wouldn't go short here because the market found support on the way down. It made a higher high, pulled back, it didn't break these lows. The trend's still up on the day. The first time it had moved up again, and again it's like almost a three-wave pullback. I find it relatively safe, and I have very good luck myself shorting 3 moves up, especially when a currency has been down 4 days in a row and has some traders that were long at a much higher price. As this is coming up, they can get some of their loss back, so there's more likely to be some selling up there. It's just common sense, simple human emotion. The euro, very strong weekly, monthly trend. A little bit of weakness here today that kind of died down, and right around 6, some strength came in. At 6 o'clock, the dollar was the weakest one. The yen was also mildly weak. And at 6 o'clock, you could look to buy the euro dollar and euro yen. Now this one had fallen, and it had a lot of weakness, but the longer term trend's up. If you had gone short here, it's pretty obvious it's not going down. It found support at the 10-day moving average once it broke above it. And aggressive traders would have bought this breakout right here, or a little bit more conservative traders would have waited to see what it does at the hourly. If it goes above the hourly, it's a pretty high probability trade, and it just took off. And I bet if you added our FX momentum tool that we give active traders, our most active traders are allowed to use this tool. It shows you on a real-time basis that pretty much all the euro pairs are going up, dollar pairs are going down, tells you to hang on to that trade. And because of this tool, normally we never want to buy and we never want to chase a currency. It's already gone up 40-50 pips, but this little sideways range here, because of the upwards momentum, you could have got into that trade here and made about 20 pips to the upper band. Notice as it's going up, the euro strength is dying down, the dollar's weakness is lessening, and at a resistance area like the upper containment band, counter trend sell signals right there, you're out. And if you wanted to buy this pullback right here, notice there's quite a bit of weakness there. If you did buy it as it's going up right here, there's no strength. Aggressive counter trend traders are pretty much aware that this uptrend's over, and you short right here for a little scalp. Weekly pivot or the hourly are 2 very high probability profit targets, and as you can see, as this came down over about a 20-minute time, it was showing the euros mildly getting weak, dollars getting strong, however not intensely so. So this support's very likely to hold. You get out of your trade here with a quick little 20 pips. Very high probability. CAD also very, very strong. Daily, weekly, monthly trend, very strong. The dollar CAD had been sitting for 3 days at the low. I gave one of our in-house traders, Matt, the go-ahead to sell this if it broke down today. Unfortunately, he was sleeping and missed it. But looking at the dollar CAD on a daily chart, this is a pattern that's very high probability. Obviously the CAD benefits highly from increased oil prices. So as other dollar pairs over the last day or day and a half, 2 days have been going up, this one was sitting right near its lows. Pretty much a no-brainer. And when it broke the lows today, you wanted to go short. And oops, let me put this back. Damn, what am I doing here? When it broke the lows today, very, very high probability short. As you can see, very, very sideways action. It's underneath the hourly, which adds to the probability, and it broke the previous day's low. This is pretty much a dead time many times. If you had short in there, I would have a really high expectation of it going to the lower band, and because it has a very high probability of a 20-25 pip profit target, it's okay to risk 10 or 12 pips on it. As this thing's going down and starting to go, I'd move my stop down above, move it down 5 or 6 pips. And if we add our FX Momentum Pro, you'll see that once this thing finally took off, it was telling you that the dollar pairs are weak and CAD pairs are strong. First of all, even before it dropped, you can see there was no strength in this whatsoever, so you just hang on to your short. There should be no fear whatsoever of this going against you, and it broke down right here. And you can see it really, all the dollar pairs were going down right here, and the CAD pairs are getting stronger, telling you that you're very likely to hit this, where this is your profit target. And as it got down to that level, notice the weakness is gone. It double bottomed right here. The momentum of all the dollar and CAD pairs are kind of falling off a cliff right here, and it had a little bit of strength at the double bottom. You get out 96.70. You're short up here somewhere around 97.10, you made 40 pips on that trade. It took many hours, but very high probability trade based on the daily pattern and the simple fact that when other dollar pairs were getting stronger the last day and a half, 2 days, this pair was sitting down at its lows. And we also, most people know that the CAD is heavily influenced by oil prices, and with the Mideast conflict, the chance of oil going up is very high, and that's probably one of the reasons why this never got any kind of a bounce. I don't watch oil on a daily basis, so I don't know if oil spiked during this drop here, but it's entirely possible. But the odds were in this play on a daily pattern, and when it broke the lows, you got in. There's no reason to get out because there's no strength as it was slowly going sideways here. And then once it started dropping, you hang on to it until you see some strength or the weakness disappear at a likely reversal area. Pretty high probability, no-brainer trade.